What's your Wi-Fi?
No, just you gotta cut the Wi-Fi off.
Use your data.
Hey, friends and family, it's your boy GB Reviews. Have you ever thought about building financial wealth for your family? I know we're going to be
What up?
Yeah.
Back at it.
Yeah.
Have you ever thought about building financial
Shout out to YouTube and the ads.
No free promotion, man. They gotta pay for that.
Shout out to YouTube and all the ads. Let's let the earners in. YouTube, what's up?
They gotta pay for that. You know that. That's off the rip. Yeah, we got a lot to talk about today. A lot going on in the market right now, man. But
As always.
First and foremost, greetings and salutations to all the earners all over the world. We looking forward to getting into it. We got a, action-packed show for you guys, as always. You know how we rocking.
Family coming in.
Yeah. Let's do it. The earners is filling up the building right now.
Yeah.
We got a lot to cover today. This is going to be a big one. As always. Shout out to everybody that's been spreading the word about Market Mondays and Earn Your Leisure. We greatly appreciate you guys from the bottom of our heart. We're working on some really big things. Shout out to everybody that saw that Shaq interview last week.
Yeah, that was big. Yo, shout out to everybody that was going to bat for me, man. When Shaq took a punch.
Yeah. The Diesel.
I just trying to be down with the bull-headed bear crew, man. You know what I'm saying? Every day I'm fighting for us, and
the Diesel.
Shaq just going to throw me under like that.
The Diesel, man. That was crazy. Shout out to Shaq, though, man.
Yeah, shout out to Win-Win.
Shout out to Win-Win. Shout out to Mike. Shout out to Kwame. Shout out to Authenticated. Shout out to the whole staff out there, man. We really enjoyed ourselves. What's going on, brother?
What's going on, brother? I told you give me Shaq over Yao Ming, and y'all went and got Shaq. Y'all amazing. How y'all feeling?
Got the t-shirt with the dinner coat. You looking like you're going on a hot date, man.
Nah, I'm just chilling, man. Just trying to switch it up.
Sharp, man. I can appreciate that. That's a sharp look.
Yeah, man.
How y'all feeling?
Good. How are you, man? How's everything?
I'm good, blessed. Cannot complain. Happy to be here. Happy Monday, everybody. Yeah, y'all killed it with that Shaq interview, man. Y'all are doing some legendary stuff for real.
Yeah, I see. It's crazy because I seen you in there watching it live, like you was commenting.
Yeah, and I was super geeked.
Yeah,
that was dope.
Yeah,
it was dope.
Shout out to Shaq, man. Shaq is a good dude, man. Humble. It's crazy to be, Shaq's a legend. Like he's like Mount Rushmore. So for him to just be that down to earth, that humble, just goes to show you like everybody needs to be humble. Like, you know what I'm saying? If somebody that's worth over probably $400 million, one of the greatest players of all time, been a top flight celebrity for 30 years now.
Yeah, man.
And he treated us like he knew us for 30 years.
Yeah, we was just kicking it, man. Like legit just gave us an hour of his time, which is like, I mean, how often does that happen for somebody of his stature? So to allow us to have that time to kick it, to crack jokes, there was some parts that wasn't in there that we got to share with him. It was dope, man.
Yeah, he's the only ball player to go platinum and gold too, right?
Yeah, he said that.
That's a fact. That's a fact.
Yeah. So we're gonna get into it. We're gonna start off with the disclaimer. Are we putting that up, or we're just gonna read that?
Yeah. Just you can, if you share screen, I can throw it up real quick.
Got you. It's the second one.
Yep.
You got a new setup. It looks like a different.
I think he moved rooms, man.
All right. Yeah. So this is our disclaimer from our legal department. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and you wish to reply on. Whether for the purposes of making an investment decision or otherwise. Always consult a professional if you would like to. Always do your research. And once again, remember that we are not here to give you investment advice. These are our personal opinions And yeah, that's it.
That's a message from the good folks at Earn Your Leisure and Ian Dunlap. We appreciate that. Just got to get that out the way. Guidelines.
Yeah, man.
Ian, I'm gonna reclaim it. All right.
Go ahead. You good?
Yep.
Yeah. I get nervous when I have to start reading legal documents. I feel like I'm in court. I feel like, you know what I'm saying? It's like the law is on me. But you know, we have to.
No, it's important. It's important.
It's
important.
That's important. Okay. So guidelines. If you have any EYL University questions, please just email us at info@earnyourleisure. Do not ask that question during the time frame for the respect of the time that we have, which is limited. If you have questions about Red Panda, please ask that in the Red Panda group community or on Telegram. Questions, please try to limit your questions to one question.
Please, just one.
Please do not do one with a
one good one.
Yeah,
yeah,
please,
one good one.
And anything else?
Yeah, I mean, that's all of our guidelines.
That's guidelines.
Yeah, and I see people have their hands raised. We're going to try to get to as many people as possible. If we don't get to you, it's not because we don't love you. We do love you, but we're going to try to get to as many questions as possible. So like we said, just have
and
one solid.
Also, shout out to MG, the mortgage guy. This Thursday, yep. We haven't spoke to our guy in a minute, but we're going to do a open enrollment. So once a month, we do an open enrollment class for EYL University. That is this Thursday at 8:00 on YouTube. And it's going to be for first-time real estate investors. But it's going to be not just first-time real estate investors, but a class for real estate investors, but people that's really maybe one property, five property. A lot of times we do stuff and it's like 100 properties. Somebody has 300 properties and the average person does not have 300 properties or 100 doors. So this is going to be for people that might be interested in getting their first investment property, might have one or two investment properties, but around that, like under 10. Like if you have under 10 investment properties, this is all the information for you guys. So that's going to be free. That's going to be on YouTube at 8 p.m. And that's, like I said, that's an open enrollment to kind of give you a preview of what we do every single week on EYL University. And then on Monday, the price is going up of EYL University.
You heard that.
Yeah, the price is going up. So that's the last hurrah. If you're interested, on Friday, the price is going up. The price is going
earners
up.
that are already with us. Y'all don't have to worry about that.
Yeah, so go to EYL University, enter code earners, and then shout out to Derek Grace. Can't forget that. Derek Grace, a legend in his own right. We are dropping that interview tomorrow, and that's going to be a major
solid one.
Good guy.
Yeah.
Good guy.
Hell of a dude.
Yeah, good, real gentleman. So, all right. So now we're going to jump right into it. EYL breakdown. Are we going to do chart first?
You want to go there?
Ian, are we going
whatever fire y'all want to do, we can kick off with.
All right. So you know, for the last few episodes, we've started off the episode with some education as far as we did the Apple breakdown, and then we also did a technical analysis chart last episode. So I thought it would be fitting to give a little bit more education, because we try. That's another thing with this show is it's not just to kind of give you the hottest stock, it's to educate you so you can become a master investor yourself. So
all pun intended.
So one of the things that, you know, when you talk about technical analysis, so it's the whole thing when it comes to technical analysis, it's not just reading a chart. There's different things to look at. So the 200-day moving average. You want to tell them what the 200-day moving average is, Ian?
Yes. And if you let me share, I'll go ahead and fire off.
I got you. It's you.
You got it. You got it.
I appreciate it. Yeah. So the 200-day moving average is one of the simplest indicators that you can ever use to be able to know where to get in. So shout out to Trap. He always say you got to have your clip ready, right? So everyone's always like, okay, if the market drops, where do I actually buy? Because I have no clue, because I feel like I'm guessing. If you go to any platform, the 200-day moving average, and for those of you that have read Money Master the Game, please type in chat who recommended the 200 as a primary instrument to buy. But this beautiful turquoise line right here tells you a spot in which you need to buy. So if the market drops down here for this particular company, which is Apple, at 149.12, you know, investing has considerable risk. Please consult an advisor. But this is the area in which you will want to start to look to load a boat. Gem number 2, if a company is below consistently its 200-day moving average, you want to stay away from this stock. So you'll see good companies like Microsoft, Apple, which hit all-time highs today. Shout out to the stock club members. Y'all killing. I appreciate y'all. these stay above the 200-day moving average. But if you go to a daily chart, or I'll give you a quick gem, go to a 1-year week chart. And guess what? Here at 139, when a recession hit and everyone was panicking, this is a great time to buy. 139.95, right? Stayed steady. And today, Microsoft, for the first time in history, hit 200. Game, set, match, right? So let's go to another company. Look at GNUS. It popped up like crazy. This is not a good company. It's about to come back to this line and back below it. For those you know, I already said it's going to come down to $1.89 and some change. If we look at Hertz, right? This is going to be the last time we beat up on Hertz.
Yeah,
I promise. And Hertz is still dead. And I threw the is in this time. Is it delisted? I don't see the ticker. Okay. Let me go to GE. You can see GE is underneath this 200 moving average. So when you guys are asking, well, it's so low, it has to come back, right? No. If you're looking at this weekly chart, you can see that it's below this 200-day moving average. So that moving average tells you where the price should stay above. But if we drop back because of recession or because of collapse or any other economic reason, the 200 is where you want to look to buy quality. And I'll throw one more your way. Let's look at Google. We don't talk about Google enough.
we should.
Google, right? And we should talk about it more because, and once again, another tip, the number 1 and number 2 players in the space are the ones you should look to invest in. Google still owns the search engine, hands down. And then we saw the same thing happen when Corona was happening. Great. Everyone panicked. This line here at 1172. And now Google's at 1451.86. So the 200-day moving average is the simplest indicator to use if you want to know where you need to load the boat with a bunch of shares if we drop back down later this year.
Ian, so if I'm looking at this chart, right, if I see this turquoise line, theoretically, I should be looking at that as like, that's the floor. Like that is the floor. As if it gets close to that floor, I should load up.
Yep. This would be support. Okay. This would be support or the floor. And somebody put it in YouTube. Shout out Tyler. Everyone doesn't like Apple, Google, Microsoft because it's not the sexiest story of all, but you want A players that are going to continue to perform at a high level. You cannot avoid that. You cannot avoid that. So when companies fall below that line and they don't have good revenue, the hedge funds don't like them. They're not going to perform too well. This is Ford. Ford is dancing underneath that 200-day moving average. No good. No good.
So for like a good company like Apple, where it looks like, I mean, the only reason why I really hit is 200-day situation. Yeah, okay, thanks. So it hit it during the Corona, but other than that, it's like it's moving way ahead of its 200-day moving average. So if I'm looking to buy Apple and it's like, all right, I'm not really confident that it's gonna. I don't even know if it's gonna hit the 200-day moving average because, like, so is that always a gauge, or is that, can you use like 100-day? Like, what's your advice for somebody that might be a little bit intimidated because they're like, it's never gonna hit the 200-day moving average?
And then here's a good tip before I go there. The market crashes have small crashes every single month, and every year there's usually a big dip. Election month and night will be very interesting. Not saying there's going to be a huge crash, but there's going to be some volatility there in which you may be able to pick up some shares over time. The 100 is decent, but it won't get you as always as sharp of an entry. But if you need more entries, you can go to the 100-day moving average, and you can see it moves it up to $250.02 if you need more entries on any particular stock. So even if you name, let's look at Netflix real quick. This is a 100-day moving average. The 100-day would be here at 362.42. But if you go back and do 200.
And somebody said, where can they find these charts? We actually talked about that, last episode, but these are on any of the platforms like E-Trade, TD Ameritrade, Fidelity. Yeah. Yep. If you have a brokerage account, you'll be able to access these kind of charts.
These are common. Why is this?
But but this is really dope because, like I said, I mean, for most people, they're just looking at a stock And, you know, there's really no formal education of how to evaluate a company, whether it's on the fundamental side or on the technical side. And a lot of people talk about fundamental analysis. Fundamental analysis is extremely important, but there's not too many people on Instagram or social media talking about technical analysis. Reason being, in my opinion, is that it's harder. It's kind of hard to really explain charts to people and stuff like that. So This is one of the reasons why we want to do it and like kind of like break it up a little bit in every show to kind of give you an education on, you know, this is how investment fund managers and advisors and hedge funds, like, you know, it's no different as far as the general premise of it. So now you, as a regular retail investor, you can start to educate yourself based off of some information that, you know, was provided, and, you know, take it from there. So
we started with candlesticks, and then we went into how to actually access a 5-year chart and a 1-year chart, and now we're doing a 200-day average. I got a question, Ian. So the support levels, the floor, what are the resistance levels? Is that an indicator that can be shown on this as well?
Use this. The 200 is great because that shows support and it gives you a good area. These 4 areas that I highlighted, you can look at a quarterly chart, a daily chart, a weekly chart, or a monthly chart for that 200-day moving average. And it'll give you a different insight on different prices in which you can look to get in. And it's another tip too. Gem of the day for real, for my long-term investors, use one indicator. Marry one. Because if you start to have a 200 EMA with the 50 and the 20, and then on top of it, you throw fibs, you have RSI, stochastics, you're going to mess up your entries. Like I posted it earlier today about the brother that has like 400 grand in some of the stock picks. I'm like, what are you doing? He was like, I'm just investing in the quality ones, holding them and letting them go. Investing does not have to be hard. But when you throw in all these indicators and we start chasing everything, that's when things become incredibly difficult. So you can look at a quarterly chart, a monthly chart, a weekly, and a day. Find your spot that you want to get in. This is one of my favorite tools, Sharpie or a dry erase marker. Write your price down, stick to that price, and when it gets there, buy, and you're good.
Nah, we appreciate that. Shout out to Bradley on the super chat. We appreciate that. Shout out to Wall Street Trapper on the check-in. Okay. Thank you, Ian. Appreciate that. Welcome. As always. Bradley, we're gonna get to this question, but I just want to just kind of go into some other things first. So, all right. So once again, every episode we're going to try to give you like a, you know, maybe like a split screen for a couple minutes just to kind of give you some information that will help you be better investors and better traders.
Yeah, some people are visual learners, so it's better sometimes to see it. Some people are auditory learners. It's good.
And even myself, I'm learning, like, you know, I've been investing for a long time, but I find myself using charts a lot more now than I did before. Like before I buy any stock right now, I look at the charts. That's like one of my things. And I always, like I said, I mean, I read the book Technical Analysis just like this thick years ago. So I've always been familiar with technical analysis, but I just never really, I kind of got away from it. But spending more time speaking to Ian, I actually find myself looking at charts now a lot more than I did in the past. So yeah, it's been beneficial.
And I want to say this too, everyone spends a lot of time battling, is it technicals or fundamentals? Okay, in the 1950s, when they didn't have computers and computers were the size of like an apartment building, I get it, fundamentals were best, right? But now the fundamentals are baked into the price already. So companies that are not doing very well, that's going to show up very quickly in the pricing on the chart. That's why I tell you guys, when you guys get too in love with a company that's shooting up really fast, like Genius Brands, and I'm telling you it's going to roll down, the fundamentals are baked in. And we'll dive into it later at some point about the kid that lost his life on being over leveraged in Robinhood, right?
Yeah.
But you have to focus on quality companies that are good, and then realize that whatever fundamentals are in play, like Apple, great revenue, Microsoft, great revenue, Google, great revenue, they're going to go up. The ones with no revenue, they're going to float down to the bottom of the ocean.
Yeah. I was just watching that on CNBC. They were like, yo, there's a reason we keep saying Apple, we keep saying because they keep going up. It's very simple.
Don't complicate.
Yeah, this is not don't make it complicated.
It does not have to be complicated at all.
The first rule in dating is never complicate the vibe. Don't overcomplicate the vibe. I am giving relationship
Get that knowledge.
That's a relationship. That's a relationship gem right there. don't overcomplicate the vibe.
Please.
People sometimes they try to overcomplicate the vibe in investing, and it's like, nah, don't do it, because you're trying to find the next company and you're just going to keep striking out.
Yeah, stay in your lane.
Stay in your lane.
Stay in your lane.
So, okay, EYL University, we're going to get to you guys, but before that,
Yep.
let's talk about artificial intelligence. So,
traction today.
yeah, I put a post up on Earn Your Leisure's page about AI, and it got a lot of likes, a lot of comments. So I figured, why not talk about it for a couple minutes? So it's interesting because we talk about tech a lot, but technology actually can be broken down in a lot of different sub segments.
Mm-hmm.
So like when Wall Street Trapper was on, he talked about cyber security. That's a niche within.
He gave us a gem
tech.
too. CrowdStrike.
Yeah, CrowdStrike. That's a good company. Biotech. We got a very big episode next week.
Mm-hmm.
Speaking about biotech, and we got a program that's going to be rolled out incorporating biotech, and then artificial intelligence. So artificial intelligence is something that is kind of already, people look at artificial intelligence and it's like a robot like going to war with a human. But I mean, that's part of it. But artificial intelligence is already being used. If you look at Alexa, if you look at Siri, so what it is, artificial intelligence is really what they call smart computers that have the ability to learn, and computers that you can actually like, it's evolving over the course of time. So like Alexa and Siri, they have the ability to learn. They're like learning. Like it's like you can teach them. So people was interested, like, well, how do you invest in AI companies? This is like a big thing. So you'll be surprised. Some of the top AI companies are some of the companies that we've been talking about for months now. Salesforce, Netflix, Amazon, Dropbox, Microsoft, Google. Surprise. They're all AI companies. They're all leading AI companies.
And it's been here. You didn't say IBM, but IBM too. Like it's been here. It's been around us. So there's 4 types of artificial intelligence. So you kind of mentioned it. So reactive machines was kind of what you're talking about, like when they react to a prompt, and you have limited memory. That's like the self-driving cars in that lane. And then you have the theory of mind, which is like kind of crazy because those are the ones that will be the future. So like when people think of the theory of memory, it's like when Will Smith was in iRobot. Like that would be that. Like you're training computers to actually have a conscience and make computers that have consciences. So that's one. And then the self-awareness ones, which is what we're seeing now, like with everything with social distancing. I know we're going to talk about Amazon a little bit, but what they're doing as far as like having detectors, being aware of somebody's temperature when they walk in the factory.
And it was crazy because when Facebook, I put it in the post also, Facebook shut down their robots last year because they built robots, and the robots developed a communication that the engineers couldn't decode. So the robots were programmed to speak, but they started to develop a more advanced level of communication amongst each other. And the computer programmers could not code what they were saying. So they pulled the plug on it because it was getting crazy.
Yeah, we saw Watson. We thought it was like, oh yeah, Watson, he can beat Craig Jennings in Jeopardy. Nah, it's deeper than that.
No.
A lot deeper than that.
Yeah, it's real. It's real. So, all right, we got another company we're gonna talk about that is not as popular. But Ian, you got anything to say about artificial? Before you, everybody on YouTube, 1,400 people that's on YouTube right now, we appreciate you greatly. If you could take a millisecond and like this video, it helps out a lot with the algorithm. So YouTube community, if you can just hit the like button.
Smash the like button, please. I love y'all. Y'all are amazing.
Ian, got anything to say about AI? Not Allen Iverson.
Shout out to him though.
Shout out to my guy, my favorite player all the time. But the leading, I mean, Salesforce's AI is groundbreaking. But the leading tech companies with the most capital, I know you guys are going to look for a company of the future, but the ones with the most capital are going to invest heaviest in AI. So I'll give you guys a heads up on that.
Okay.
So one company that I actually invested in last week, AMD.
Yeah.
AMD. So AMD probably is not as popular as Salesforce, Amazon, Google. So you might not have heard of AMD. What it stands for is Advanced Micro Devices. AMD's is interesting. It's an interesting company. I invested in AMD last week. Shout out to Mark. So they're the number 2 maker of central process units, and they made two of the three fastest computer systems for the U.S. government. AMD's if you look at their chart, you talk about charts.
Powerhouse.
You look at their chart. Their chart is crazy.
Yeah,
Shout out to the stock club members there. We've been in there about 2 years. AMD is a powerhouse. Hold it.
Yeah, love it.
So Troy, you got some information about Apple.
Yeah. So Apple, if anybody watched today, I know like we love talking about Apple, but they had their developer conference today, and it was big news that they are actually changing the game. They're actually going to start creating their own processor for their computers, which kind of is like seems like a no-brainer because they have the technology and the revenue to do it. But what it does do is put companies like Intel, who they had a partnership with since 2007, it kind of takes them out of that game, and it's a huge market, right? Apple's the number one computer company. So the impact that it'll have on that, we'll see in the near future, but AMD as well, because there was some talks that AMD might be the next processor inside the Apples and the new Mac computers. And so it's going to be interesting to see over the next few weeks. I still love AMD. I'll be interested to see what happens to Intel though. Yeah,
AMD, and shout out to Mark. He just texted me, said, don't forget about Xbox and PS5, is it?
Oh, the PS5s, right?
PS5, that's AMD as well. But Apple, vertical integration. We're talking about vertical integration. They control everything. So now they're going to make their own computer systems,
their own processors.
Because Apple people don't realize they don't make, up until now, they don't make their own like Intel.
Yeah.
It's like so now they're going to do everything in-house.
Yeah.
Keep all the revenue.
It's going to be a lot. It's going to be crazy because now, like, if you have an app on your iPad or an app on your phone, you can't really use that app on your MacBook, right? Because it's a different processor. But now with them creating their own, now it's just like a one-stop shop. The app comes on your phone, your iPad, and your MacBook. They cut out the middleman.
Yeah, because partnerships can go awry, and you guys know this is being content creators. You don't want to rely on someone else to record your vocals, mix them, master them, put them on iTunes, right? So it's better, and this is one of the reasons why I love Apple. Like, they'll have partnerships in place, but this is a good lesson for business owners. At some point, partnerships go awry. No matter how great things go, you have to prepare what if, right? So even with me, I try and bring so much value every week that nobody can replace me. But you have to like earn your keep and your value every single week. So for my entrepreneurs, you got to keep putting that. I always use the sports analogies, but you got to keep putting up numbers. Mike was the only player that can walk into a GM's office and be like, we're going to get a chip. So now Apple is like, hey, we're going to make our own chips so we can cut Intel out and take care and have more profit, which is a very smart thing to do. And as a result, the developer conference is good. And then they bumped up and hit a high, and so did Microsoft. So tech is a dog-eat-dog game, but we knew this was coming.
Yeah, I saw Microsoft said that they're not Microsoft. I think was it Google? Somebody's giving up on the video game consoles. They said we're out of this, right? With PS5 coming and Xbox obviously putting out their new system, they said, listen, we're just gonna focus on what we're doing. We're out of this.
Yeah. So all right, let's go to EYL University. You guys have been patient.
Thank you.
Milton,
we coming to you.
Milton,
unmute yourself. You've been unmuted. Milton had his hand raised when we started.
What's going on, Milton?
Hello,
Milton. What's up?
What's up, brother?
What's good? Yeah, I just got a quick question about private equity firms being able to use our 401k. I was wondering, how does that affect us?
Can you go into a little bit more detail about your question?
Well, private equity firms can use our 401k to buy out companies, I think. You guys get the question?
Hello? Yeah. No, I'm not familiar with the. I mean, from most of the 401ks that I see is actually invested in actual like mutual fund type of platforms. So, I mean, like Fidelity, Oppenheimer, things of that nature, and they're not private equity firms. All of those companies are huge institution. Most of the 401ks are institutional based. I mean, that I personally, not to say that all of them are, but that's just my own personal. Ian, I don't know if you
same thing. If you've seen an article, any legislation that states otherwise, if you can drop in a Zoom, I appreciate it. I would love to take a look at it.
But yeah, we're always looking to learn. So yeah, if you got information on that, then yeah, send it over.
Thank you. My bad. I do better research on the question, so I'll get
No, you good.
Appreciate you, Milton.
No problem.
All right, Ryan, we coming to you.
Hello, can you hear me?
Ryan, I got you. See, it wasn't Randy today. It was Ryan, my brother. What's good?
It's good. What's going on? Hey, my question is, I've been having these chats about what like fallbacks or not fallbacks, but
Pullbacks.
pullbacks. Yeah. And to my understanding, whenever somebody like whenever a company goes up too high and people want to take the profits off, they take the profits and then the stock falls down because of that. I'm trying to figure out why does that happen, because in order for somebody to sell a stock, somebody has to buy it. So it's like, why is the stock losing value?
Sometimes when people take profit, a lot of people exit. So let's say if we have 100 people in the market and let's say 65 of them sell, right? That will make the value and speculation of it go down for a short period of time. It's one of the reasons why I tell you to just invest in quality companies, because you won't have to worry about that as much. But there's a couple of things that cause pullback. So we are the little fish. The hedge funds and private institutions are the big whales. So if they pull out of a stock, and one of the reasons I like Apple, Microsoft, Google, Netflix, because the hedge funds love them, right? Because there's incredible value there. In the long term, I wouldn't worry about it as much, but short-term pullbacks happen when people are starting to take profit, or if a stock runs up too fast, like how it happened with Genius Brands. Same thing will happen with Fastly. That will come down a little bit. It happened when Elon talked about Tesla as well. So be mindful of that.
So it's really just when the big companies, when the big investors pull their money out, then that's when.
Yeah, it's just an issue of supply and demand. We are the little ants on the ground. The hedge funds are the giants.
Right.
So you could also look at like a giant marketplace too. It's like it really all comes down to supply and demand, like Ian said. But it's all about what somebody like stocks. Stocks are, you can kind of look at stocks kind of like gold, right? Where it's like there's really no set value for gold. It's just whatever people think it's worth at that point in time. So if Amazon comes out with a new thing and everybody's just racing to get Amazon, then the price goes up, right? Because now it becomes more valuable to the people that's willing to buy it. And then it's also more valuable to the people that's willing to sell it. It'll be less sellers. There's less sellers now. So now it's more the price goes up. Whereas if they just go bankrupt, now everybody wants to sell. It's flooded. So now it's way more sellers. So when there's more sellers, the price automatically goes down and people don't really want it. So now in order for you to sell it, you're going to have to sell it at a lower and lower and lower price until somebody is willing to buy it. And the worst possible case scenario, well, nobody, that really hardly ever happens. But I mean, so that's kind of like the supply and demand that some things that they teach you in business school is actually useful. Supply and demand is actually useful because that's kind of like the golden rule of business, whether you're selling t-shirts or whether you're selling stock or options. It's all about supply and demand. So that's kind of like the easiest way to kind of conceptualize the stock market. It's no different than any other market, whether it's a fruit and vegetable market, whether any market. It's all about supply and demand.
Yeah. So, and you mentioned gold, 8-year high today for gold. So a lot of people have seen, people are, investing in commodities. I think I was reading a report on CNBC. They were saying that there's $1 trillion that have been taken out of the market that are just waiting to come back in when people feel safe So there will be a boom. We just don't know when it's going to happen.
There's a lot of money on the sideline.
A lot of money on the sideline. Trillions. I appreciate you, Ryan.
Everybody. Appreciate it.
Appreciate you, brother.
All right, who we got here? Brian. I hope I'm saying that right. Or Brian, I'm not sure. You're unmuted. Unmute yourself.
What's going on, fellas? Actually, Brian.
Brian, what's good?
Brian.
I see.
So I just had a question about investing, like buying stocks for like my nephews. Like you guys mentioned the 529 plan. Like, is there a specific 529 plan you guys recommend out there?
Rashad, fire away.
Yeah, I mean, it really just depends. It's state specific. Some 529 plans. So what happens is that there's like 50 different 529 plans, and they're all sponsored by different mutual fund companies. So like Oppenheimer has a state. I think Franklin Templeton has either New York or New Jersey. So it's a bunch of different ones. And then some perform better than others. But the good thing is that if you invest in a 529 plan in the state that you live in, not all states, but a lot of states, you get a state tax deduction. So that's always beneficial. So yeah, it's not really like one is better than others. Like some have performed better than others. But I really look at the the state that you live in, unless it's like really, really terrible, the state tax deduction is always beneficial. So if you live in New Jersey, it's probably more beneficial to invest in a New Jersey state 529 plan than a New York state 529 plan, just because you'll save some money. But yeah, that's how it goes. But another way to invest that we talked about a few times also is the UTMA and the UGMA. The UTMA is a way to save money for your child or just a minor in general, but it's not necessarily for education. You can just invest in mutual funds or index funds or stocks or whatever, and you can have that. So yeah.
Perfect, man. Appreciate it.
Appreciate that.
We're going to do a class in EYL University because we get that question a lot.
Yeah,
so
I feel like that.
We'll probably do a class
week.
next month. We'll do a class on the best ways to save for your children, and we'll talk about life insurance, 529, UGMA. We'll explain the difference. We'll go into detail. So
yeah, Ian, there are a lot of people on YouTube, and I'm gonna get to some more questions. A lot of people are talking about NKLA. I saw today that Morgan Stanley said that their price is going to be dropped by 30% or something like that. Were you up on that?
No revenue, so it's no reason to be super bullish on it. I mean, like I said before, we had in a stock club, people were in TVIQ, and then when they got acquired, they also got that bump. But it's one of the things like, so we really got to dive deep into the Robinhood part, because Robinhood,
talk about that.
Even with that, a lot of traders in Robinhood are pushing up the value of these companies, and they're not as valuable.
Mm-hmm.
So part of the reason that TVIX, because I see people on YouTube asking,
yeah,
Credit Suisse said that they're going to delist them because of too many traders basically trying to trade it and short the market. Here's the thing. So when I tell you guys the market is rigged to stay up, that's true. So that part of it is quantitative easing. But the big lesson I want you to take away from that is stop trying to short the American economy, because there's too many forces at play. There's literally trillions of dollars at play. So even though it may fundamentally make sense, you may not be able to execute the trade. Like I've even seen the VIX future hit and high at 2015 and 2016, and they stopped trading on the VIX future, and you couldn't get into it until the market settled 2 weeks later. So for those of you in the stock club who kept asking about TVIX, I was like, hold on. I didn't know it was going to get delisted, but you do not want to short the market for long periods of time, maximum 2 weeks. But any highly leveraged ETF, you want to stay 3 to 5 days maximum and then let it go. But a lot of people are pushing up these stocks on Robinhood and chasing them at these highs. And NKLA is a hot trade, but it's not a great company yet. Wait till it turns into a great company.
Appreciate that.
Yeah.
We got EYL Panama. What's good, bro? Unmute yourself. You've been unmuted.
Panama.
What's up, Kings?
Everything
What's up,
good?
brother? How you doing?
First and foremost, let me say post Happy Father's Day.
Thank you.
Appreciate you, bro.
Appreciate
Thank you, brother.
that. Appreciate
I know
that.
y'all fathers. So I'm doing my monthly to the quality companies, the Microsoft, the Apple. But I want to hear y'all thoughts on some penny stocks that are good companies.
That's a
catch-22.
Yeah, what's the word I'm looking for? Like that's not even,
word.
oh man, your penny stock can't be a good company. Like that's almost
It can't be a good company.
Oxymoron.
That's an oxymoron.
That's an oxymoron.
I'll let you finish. I'll let you finish.
Listen, I love your voice, love your energy.
Right.
This week number 2. Come on.
Hey, yo, P. I'm gonna give it. It's gonna be a term now, because every week our brother Bam says the same thing to us. Yo, I'm doing these penny stocks. I'm looking at these penny stocks. So anytime anybody asks about a penny stock, I'm gonna call. Don't ban me.
But I'm glad you asked that question, Panama. Shout out to Panama, my brother, because it speaks to, like I said, we all have it in us. Like we all want to hit a home run. We all want to hit a deep down. Nobody wants to just be a base hitter. We want to be a home run hitter. Like you know what I'm saying? We all want that home run. So no matter how much, it's like, if I could just get this 2 penny stock and it goes to $1,
batting average gonna be crazy.
I'm gonna be in the Bahamas just chilling.
You know what I'm saying? You know that the home run hitter don't have the high batting average, man. You want a high batting average, man. You want that batting title.
I was just opening that question for the floor, but my main question, there's a lot of female listeners. What's a good cosmetic brand or company that's doing well? Because I've been hearing stuff about EL. I think EL, that's a ticker since the EL.
Yeah, that's Estee Lauder. They're decent. But before we get to that, I want to know what penny you're looking at. So
you know, I travel a lot, so this is penny stock called Express Spa, and they're turning their spots into like COVID-19 testing facilities all in the airports. So I think it's XSPA.
Yeah, it's a good trade. What Jay said, what you made it a Halana, I made it a house song. It's a good trade, but not a good investment. So I don't want you to end up paying Searchlight Publishing.
Right.
It's a good trade. I've been in this 10, you've been in the 5.
Right.
I got you.
Are you on fire today?
Nah, but that's dope. That's you know what though, Panama, that's good and that's encouraging, because now you know what that speaks to. It speaks to people that's looking at companies different. So now when you go to the airport and you see in a spa and you see that they're doing COVID-19 testing, and it's like, instead of just looking at it like, okay, that's interesting. Now it's like, what's their stock symbol? And like, let me research. So I'm seeing that a lot now, where it's like, now instead of just looking at a company and just, now you're looking at it as an opportunity.
Yeah, perspective is key.
Yeah,
so like when you get the information, like we said, now just key when it's applied. Like you hearing these things, and now you're actually applying it to your everyday, and now your perspective has changed. And that's the craziest thing. Is like when your perspective changed, it's like you want to get everybody else to get on your wavelength, but everybody's not meant to be at the same time. But that's dope, man. That perspective is changing throughout the country and throughout our community for sure.
Yeah, I can't share screen, but even if you look, XPA a few years ago was at 108. It's currently at 516. So even if I want all my investors to go look, if you go look at a 5-year quarterly chart, you can see it had a ton of down quarters. So I don't want you to invest in it. It's a good trade, but don't do it. Please don't do it long term.
P.
Appreciate you, P.
Appreciate you, brother.
Likewise. Love y'all. Easy.
Thank you, brother. I appreciate you.
EYLU.
Yeah. Who's that? Oh, I know who this is.
EYLU.
Let's go. Mike, what's up? Unmute yourself. You've been unmuted.
The university has a question. Guess not.
How our own brother not gonna have it?
Hello?
Yeah, what's up? What's up?
EYLU.
Hello, this is Brian. How you doing, brothers? Happy Father's Day to you guys. I'm not gonna take one question in the possible, one in the pump. I just want one question. I'm an older guy, 54 years old. I had stocks, but I haven't stayed up on them. I was investing since Scottrade was out. I just want to know or help in some direction. I got a couple dollars saved up, and I just want to put it in the old, not sexy, slow. I want the slow shoebox money under the mattress. I want to take my time. I don't want nothing. You know what I mean? I just want to put it there. I'm willing to go 3, 5, 10, whatever I'm blessed with. I want to put my money there and just let it go and add on from there. Can I get some suggestions or some alternatives in that area, please? One question, that's it.
We got a whole program. Rolling out just for you. But
you want safe returns? Is that what you're looking for?
Safe, yes, I think so. Yeah.
Easy.
Yes, sir.
Jeremy talked about it. So we had a guy, we got a couple dollars put in the market. Jeremy, I'm a huge fan of index funds, but I'll give you one that I hadn't really talked about before. It's a growth index fund. VOOG is a ticker. It's a Vanguard 500 growth index fund. So you should do anywhere from 8 to 15% on average a year. Slow and steady. You won't have any huge losses. If we have another crash, buy heavy then, and you're good. You won't wake up in cold sweats like Biggie in a Warner video or nothing like that. You'll be good. I promise you. Index funds are the way to go if you want safety.
Yeah, I seen that last show that you had with the other guy. I was listening to that and I paid attention to that. So that's where I was leaning at. And I just want to make sure because, just like you said, once I get the knowledge, that's why I keep listening. But I know where I want to go. I just want to put mine there and take it easy. I'm not trying to go nowhere. I'm not trying to flip the penny stocks. None of that.
Yeah,
I'm simple. I'm an old dude, simple. That's where I'm at in my life right now. I'm happy. I'm humble. I'm grateful. Just like you said about Shaq, that's where I'm at. I'm grateful. I'm thankful to be alive.
Yeah.
And I just want to do a couple dollars. That's it. And thank you guys very much. I appreciate you guys. Happy Father's Day. And stay strong and stay safe.
Appreciate you, bro.
And happy Father's Day, belated Father's Day to all the fathers.
Yeah,
all
absolutely.
over.
Absolutely.
All over. You are appreciated.
Royce Wheeler, we coming to you. Unmute yourself. You've been unmuted.
Yes, sir. How you guys doing?
We great.
I I had a quick question because Ian, I saw on your Instagram where you said Genius Brands was going to go down to like $1.98.
Yes.
What was your time frame on that? Like
90 days.
90 days?
I think either 60 or 90. I forgot what the post. You guys can look on Twitter or either on my IG. I think it was either 60 or 90 though.
Okay, all right, because I definitely want to try to make an options play on that. So so that's why I asked.
I appreciate it, but before you do that, I want you to do your own research, right? So I want you to go look back and go look at 5 or 6 years ago and see when they hit that top of 487. Once again, that's 791, and then it broke that high and got to 1173. Why? Now, if you're gonna do an options play, you only have a little bit of room, so you only have a little bit more juice in the orange before it's over with. Because it's at 251 right now, and actually it did hit $1.98, but it was pre-market, so I don't count it unless it's doing it at the open. But technically, that price already hit, but you only have a little bit of time to squeeze a little bit more out of it.
All right, cool. Appreciate it.
Thank you. I just want
to appreciate you, Royce.
Appreciate you, Royce. I knew he was going to try to short it.
Yeah, Everett, we coming to you. Unmute yourself. You've been unmuted.
Hey, how y'all doing?
We great, bro. What's up?
How's everything?
All good, all good. The NKLA, the Nikola stock, I've done some research on it, and the amount of stocks that are actually available to the public, does that really have the amount of power that people are saying it does? Is it really going to dictate, I guess, how high it can get or how high it should get, the actual amount of stocks that are available to the public?
One of the biggest things that will dictate that is revenue, and then how much the funds like it. Before we dance into that, though, are you currently in it?
No, I am not. I'm scared to even tread in those waters right now due to like you saying, there's no revenue. Like, what's really going on long term?
Yeah, here's the thing, and this is true. Like, if a company is good, it'll be around. So I know you guys feel like, man, I'm gonna miss out. What I don't want to happen is you guys get into some of these companies that are hot right now, and then 3 months they're not, and you come on, you kill me, Rashad and Troy.
Yo,
don't
Ian,
want that.
Absolutely.
When I looked at the stock, I'm gonna tell you what rang off in my head. I'm hearing like, yo, this is the next Tesla. Yo, they're gonna compete with Tesla, and I'm like, I remember having this conversation a few weeks ago. It was like, yo, why are you trying to get the next Tesla when Tesla's here?
Absolutely.
And so I stayed away. I'm gonna be honest with you, I stayed away. Somebody called me. I won't say Jamal's name, and he was like, we got to do this. And I was like, nah, bruh, Tesla's here. But let's just watch that.
Yeah, shout out to Tyler. He said FOMO and greed to get you every time. Listen, Baby Jordan, shout out Baby Jordan. Baby Jordan is not Jordan. You better off paying the 30 to get Mike and getting the chip opposed to getting a knockoff. So go get Jordan.
Shout out to J.R. Ryder and Harold Miner.
Shout out to y'all.
Appreciate it.
Appreciate you, Everett.
Appreciate you, brother. Thank you.
McKinley, what's going on? Unmute yourself. You've been unmuted.
Kill I believe.
Peace.
How
y'all brothers doing today, man?
We great, man.
Good.
We great.
I know y'all always doing good. Y'all looking good. Y'all feeling good. Happy Father's Day to y'all.
Appreciate likewise.
I appreciate
Absolutely. You. So, Ian, my brother, my main
How
man.
you doing?
I'm doing good.
Oh man, sorry, I did something wrong. What happened?
Oh, no, not at all, man. Not at all, man. You looking good today. I see you was on your Jay-Z mixtape today, man. You dropping a lot of bars.
yo, you feel that energy,
That's
right?
My guy,
man,
right?
Man, listen, man. He hit the gym before he came out here, man. Had the hole bumping, man. I know you did.
Yeah, you know it. That's it. You gonna do that on this 20-mile walk?
Absolutely. You see, you got the tight shirt on today. Normally, you got the suit and tie on. You got the tight shirt on.
I gotta keep switching it up, baby. Come
Hey,
on.
but look though, man.
This is my June Ambrose Jay-Z look. Go ahead.
So I like to respect the rules. Last time I almost shot myself in the foot talking about Gordon. So y'all talking about AI.
All forgiven.
Thank you, brothers. AI is a legend, my favorite player of all time as well. So we're gonna I want to talk about an acquisition, a merger, right? And they've been talking about it a lot now. Well, I haven't heard any words from it since Wednesday of last week. It was Just Eats, and they were going to try and acquire Grubhub. But before that, Uber was going to try to acquire Grubhub as well. And it seems like Just Eats has taken the momentum. So I'm trying to figure out. I'm not looking for a long-term play on either one of the stocks. But however, Ian, how do you feel about when a company is taken over? I've seen multiple times, like with Sprint and Verizon. Not Verizon, but T-Mobile. Just recently, T-Mobile took over Sprint. Neither one of them did any type of movement. It was like it was a non-existent move. So, but I've seen other times when companies have taken over other companies, and it's just been a major jump. So, do you see something like this happening that Just Eats could go from make an all new time high? Because I think like they all time high over the past was like 91, right? 99 or something.
Give me the ticker for Just Eats.
TKWY, I believe. I gotta get my notes. Hold on.
But here's the thing, and it's a good lesson for investors and traders, right? Don't guess what the reaction is going to be. Just play what's in front of you. So if it breaks out to the upside and we take off like crazy, it could be a good sign. But like you said, with Sprint and T-Mobile, it took forever for the merger to go through. It didn't do anything.
Right.
Didn't do anything.
Right.
So if it breaks out, you will see an immediate impact on the stock over the course of maybe a day or a few weeks. But if it does nothing, it remains flat, you're good. But I would hit that 5-year month first, and that would give you a good indication, because even when Sprint got acquired, Sprint was not moving that much beforehand.
Yeah, Sprint dropped.
It was slow for a long time. So I would say this would be your homework assignment to go look. And if you got another good one, since we haven't looked at that one, you can slide one in real quick. But I wouldn't speculate on if that's going to move the market a whole lot.
Okay, I don't have nothing else, but what I will do is bring some knowledge to the table next time with those three, with Grubhub, Uber, and TK, Just Eats, and then maybe you can give me a better analysis based off of my information.
TKAYY?
No, I think it's TKWY, Just Eats.
TK.
They're like, I think they closed. Well, I don't think I got the number right here. 8670 is when they closed today.
Yeah, go hit that 5-year month and see. And if it's on an upward trajectory, that'll give you a better insight on it.
Okay, bet.
Thank you.
Appreciate you, bro.
That, always. Y'all take it easy.
Yeah. Amir, this is a new one. Amir, unmute yourself. You've been unmuted.
How's it going, fellas?
What's going on, man?
How's that?
Welcome.
Good. I'm good. Thank you. Appreciate it. I had a question about retirement. I'm looking to possibly convert. I have 2 retirement funds that are just dead in the water. Wanted to convert into an IRA and then possibly convert it to a Roth IRA. Now, with the tax being as it is, how they changed the tax law, is that going to be beneficial in the long run?
How old are you?
34.
I mean, my personal opinion on that is yes, if you can afford to pay taxes up front. Because if you convert in a regular traditional 401k or traditional IRA to a Roth IRA, you have to pay the taxes on the front end. So if you have $100,000 and you got to pay, let's say hypothetically $25,000 in taxes or whatever. So, it's just important to keep that in mind. The good thing is that once you convert it into the Roth, it's gonna grow, and you're not gonna be taxed when you take the money out. So now you converted it from. Now that's the good thing with the Roth as opposed to the traditional. Is like you have a traditional IRA, you have $1 million in your IRA, you retire, you take out $1 million at one time, and you get like $600,000 because now that $1 million puts you in the highest federal tax bracket, and then you pay state tax depending on what state you live in. This is why a lot of people move to Florida when they retire, because there's no state tax. But if you have $1 million in your Roth when you retire, and you take out $1 million, you get $1 million. So it's a big difference, especially if you have a lot of money when you retire, which hopefully, you will. You're a young man. So, but it's to each his own. But like all things, there's pros and cons. But the good thing, long term, if you're young, the Roth, you're gonna probably make out better if you don't need the tax break, because you get tax breaks if you put money into a regular IRA right now. So if you're willing to pay the taxes, then go for it.
All right. Appreciate you guys, man.
Appreciate you, man.
No problem.
Your local tax professional. All right, here we go. AOG, my guy. What's going on? Unmute yourself. You've been unmuted.
Hello. Good evening, everyone.
Good evening. How are you?
What's up, bro?
Greetings.
Greetings. I've been in Fastly, FSLY. It's been breaking new highs, and I don't know when to add positions. So I would like some insight in that because I bought it in at 17.
Yeah,
And
baby Jesus.
I've added positions twice, but I feel like every time I add, it keeps going up. So like what do you do in that case?
I want you to get off the call and then go tell all your friends you're one of the greatest investors of all time.
Thank you.
Enjoy your night. You got in at 17. There's nothing for you to do. Maybe you can add some more if it comes back to 35. I mean, if you buy up from here because you bought at the low, is your average price is going to change. So like if you make your third order, you're going to have to add 17, 18, wherever you got in, and then 35 and divide that by 3 and to give you your new average. But you got in at a great price. Is your fear or the moment that you're going through, like your fear of missing out, you didn't buy enough shares at 17?
I didn't buy enough shares and I want to add more. So what I did was I bought it at 17. It went to 35. I sold, took profits, and then reinvested it.
At what
and
price?
I've been up since then. So my average now is $36.
It's a good lesson. So was it going to be a trade from the beginning or long-term investment?
It was going to be a trade, but the
And you turned it to an investment?
Correct.
Got you. Okay, so I want you to be clear when you get into it, even if it goes up 200, 300, 400%, you have to know where you're going to exit. You have to. So if you want to add, just because it jumped up that much now does not mean that it will later. So be mindful of that. So pick the price that you want to get in. Stick to that price no matter what anybody on Twitter, Facebook, Instagram, Snapchat tells you, Tinder, wherever you at, right? Don't let them deter where you're going to get in. And hold on tight because you don't want to keep averaging up and then your average price ends up being 50. And when it drops to 42, you're crying. But amazing job at getting in at 17, man. That's one of the sharpest entries I've seen for that stock period.
Thank you. Thank you.
AOG, top earner of the night.
AOG, shout out to AOG. And I
Yeah,
heard
you killed that.
somebody on YouTube said, some of these are the same calls from last week. Come on, guys. Yeah. Newsflash. They're not callers. They're part of our community.
They're part of the community.
Yes. And that's one of the perks of being an EYL University member. You get to call and we answer. So YouTube, we love you, but you gotta
y'all can join the program and then we'll get the 1-900 hustling music playing for you.
Exactly. Exactly. And the price is going up Friday. So
You heard that.
you gotta relax.
You heard that.
You gotta relax.
Danielle Simpson. Unmute yourself. You've been unmuted.
You've been unmuted.
Hello, gentlemen. Happy belated Father's Day.
Thank you. Appreciate that.
All right. I was a young lady that mentioned about the IRA last week.
Yeah.
Now, Ian. Is it Ian or Rashad? Maybe one of you guys can answer that. I wanted to piggyback on that question with the index fund. And I also wanted to, with the gentleman who mentioned the index fund, and also that episode where you and this other gentleman that was talking about the index fund. Is there a specific percentage? How should I split it up between the index fund and stock, or just go all out on index fund?
Rashad, you want to fire off first and then I'll follow with the 16.
You never want to answer my question.
I think that everybody's that's a good question. I think that everybody has their own starting point, right? So some people want to just start. It's like riding a bike, right? Some people don't need training wheels. They just start riding a bike. Now, if you ride a bike without training wheels, you're going to fall. But it's a good way to learn. So if you've never invested in individual stocks before ever in your life, and you just want to just jump into the stock market, feel free. You don't need training wheels. But a lot of people just don't feel comfortable doing it themselves. So this is where, index funds and other type of managed portfolios come into play, because you're not actually, index isn't managed, but more passive way of investing. So for people that either don't have the time, don't have the expertise, or just don't feel comfortable right away, I would say start with an index fund. As you are learning, and you could take simulated trades, you kind of like practice on stocks and put a little bit of money, $100, $200 into the stock market till you feel comfortable. And then once you feel comfortable, then you can start to transition maybe like 50-50 or 70-30. And it's like, it doesn't matter how successful you are. MG, the mortgage guy, been on the Breakfast Club 3 times already. A celebrity on social media, one of the top mortgage brokers in the game right now. He didn't know anything about stocks. I talk to him every day. He started investing in stocks a couple months ago. I think the first stock that he brought was Boeing.
Mhm.
He brought one share
Yep.
for $100. Like he literally put $100 into the stock market and it went to like 120. He's like, this is dope. I made $20. So, and this is somebody who's personal friends with DJ Envy. He didn't look at it like, oh, I got to put $10,000 into the market just to start. He didn't know about stocks. So he's like, all right, I'm going to try out $100 and see how it goes. I'm going to learn how to actually buy a stock. So take your time. Everybody's in their own race. You're not in competition with anybody, but that's my own personal opinion. If you don't feel comfortable with stocks, start with the index and gradually move over maybe like 10% every month until you have 50-50 or 60-40 or 70-30.
Yeah, and then as you get older, once you get into your 50s and 60s, then you want to go a little bit more bond heavy and then take the risk off the table with tech. But if you're young, I would go a lot more aggressive because if you don't have kids, you're not married, you don't live in an expensive state like New York, California. I love y'all, but damn, y'all, mortgages and rent expensive. You can go a little bit heavier and then you can see some of those gains. But yeah, just start small. And then it's a good thing. Test small. Because here's what I want you guys to know. If you continue to wait on the sidelines, another 4 or 5 years, 6 years is going to pass. Start with one share. Like Rashad said that Matt did. And that's one of the things that I recommended in the Rolling Out article. Buy one, because once you buy, you're either going to see that you got in at a great price, like the brother did for Fastly, or you got in at a terrible price, and then you'll learn how to buy when the market is down 2%, 3%, or, you'll learn some technical analysis and then be able to buy on your own. But take the action and start small, buy one share. It'll be one of the best lessons that you can learn. But if you want safety, index funds are the way to go.
All right. Thanks, you guys.
Appreciate you, Danielle.
Thank you.
It is the 9 o'clock hour, so I'm gonna give you my earnings report for this week. It's a company that I should have probably invested in a long time ago. I don't spend so much money with them. Nike's earnings call will be after Thursday hours. So it'll be interesting to see what Nike does. They have a strong online presence. I know a lot of the stores are down. A lot of their merchants have been closed, but a lot of the merchants, Foot Locker, Finish Line, Champs, all have online presences. So it'll be interesting to see what their numbers come back looking like. And a stock that I'm watching, and hopefully we'll all be watching, Spotify. Obviously, Spotify has made a lot of news over the past 2 months, especially since the quarantine. They did the Joe Rogan deal for $100 million. Last week they did the Kim Kardashian deal. They didn't release the numbers on that, but I'm assuming that's multi-million.
How much did their stock go up that day?
15%.
So it went up 10% the day that Joe Rogan deal came out. Yep. And went up 15% the day that Kim Kardashian deal.
Today they announced a deal with Comcast. They're actually going to have they're going to be coming to the cable networks now. So that's going to be crazy. Like Spotify? Now Spotify is going to be on cable
for podcasts.
Yeah. So the entire platform. So like YouTube has a channel on Verizon and Netflix has a channel on Verizon. Now Spotify is coming to cable. So that's going to be interesting.
Shout out to Mark on a super chat. He gave some cheat codes to his.
Yeah, y'all better screenshot that.
Yeah, shout
Mark,
out
what up, my guy?
Nah, Spotify is interesting because a lot of people when they took Joe Rogan's show off of YouTube, so Joe Rogan's show is not going to be on YouTube. I think after the new year,
he's still gonna be clips though.
Clips, but not the full episode. So people were saying like, what if you don't listen? Because everybody doesn't listen to podcasts. Some people actually watch it visually. So, but that was all part of a play because now Spotify is going to roll out their visual platform. Spotify is going to have their own visual platform.
Yeah,
Spotify's
for him.
Yeah, they're making a real push with this podcast.
So now you can literally watch the Joe Rogan show on TV.
Yeah, Spotify. Or in the app also.
Exactly. Yeah, and they have the exclusive deal with Joe Budden too. So like
Joe Budden, but Joe Budden,
he don't get enough credit. He really led that wave of being exclusive on Spotify.
Yeah, I think he was the first one.
I think he was the first one.
Yep.
Yeah, a lot of deals going around.
But they didn't take Joe Budden's content off YouTube.
No.
But Joe Budden's interesting because his deal's up September.
We will see.
It'll be interesting to see though, because you see Joe Rogan got $100 million. Kim Kardashian, who has no podcast experience, I'm pretty sure she got a lot of money.
Yeah.
So Joe Budden, who is a leader in the podcast space and has a proven track record.
Yep.
It'll be interesting to see what kind of offers he gets. Hopefully it's in the same ballpark as his counterparts.
Shout out Maul and Rory. Yeah, I hope so too.
Yeah, definitely. Tonda, we coming to you. Unmute yourself. You've been unmuted.
Come on, Queen. How you doing?
Tonda, you there?
Nope.
Damn. All right, Tonda. Let's see.
Hey, can you hear me?
Oh, Tonda, there you
yes,
go. What's
ahead.
up?
Saved by the Bell.
Sorry, I'm on my phone listening with audio because my Wi-Fi is messed up. But anyway, I have a question. Can you guys talk about M1 Finance? If you're familiar with it, and what's your sentiment on that?
I like the platform. I personally don't use it. I use TD Ameritrade, but as a backup, I've recommended M1 Finance. It's not that complicated to use in comparison to TD Ameritrade or Thinkorswim. I like them, tradingview.com, but M1 is pretty solid. M1 is pretty good.
Okay, cool. Appreciate it.
Thank you.
Thank you, Tonda.
Thank you for your question. Appreciate it.
Now I'm gonna say, hopefully I get this right. Fansleyan, I hope I said that right. Fansleyan, you are unmuted. Unmute yourself.
Hi, I have a question. It's Francine,
Oh,
actually.
Fansleyan, okay.
Yeah, I'm Haitian. I have a question about investing in marijuana stocks. With all the hype about the cannabis and all the stuff, I hear all the rappers like Snoop Dogg's buying farms and doing all these things. Is it financially wise to start investing in marijuana stock? And what's the take on that?
Your favorite, Ian.
Go ahead, Ian.
Marijuana stocks.
If you give me a ticker, I will be kind enough to look at it, and then maybe I can share screen and kind of break it down.
MJNA. I've been following them for about 5 years. They were as high as maybe 18 cents, and now it's been down to about 1 cent. It went up 2 cents in the last couple of weeks, but I don't know.
Okay, so I'm just going to record. MJNA, CNN. No, don't do it. So MJNA. Troy, can you let me share real quick?
Yep.
And I can just
gotcha.
walk them through.
Gotcha.
So I can give them a visual, so I don't think that I'm just like making up stuff on the fly.
Go ahead, it's you.
Okay, thank you.
MJNA, in love with Mary Jane.
Yeah. So here's the thing. I know everyone loves to talk about it. Like you said, all the rappers are talking about it, but it doesn't mean it's a good investment yet. Until we get national legislation, it won't be a good investment. So you can see here, the high was $1.265. Let me ask you a question. Do you have any shoes in your closet that you bought for $1? No, don't do it. It's currently sitting down here. So if you look, the further you go out, and this is a good thing. I've always said this. If you've been in a relationship with somebody for 5 or 10 years, you know everything about them, good or bad. So the same thing of a stock. So CANN, great. So you guys can continue to light up as much as you want to. CANN was at 64. It is now beneath $1. So if you're not smoking $1 worth of kill, you shouldn't invest in it. So some of y'all is smoking wedding cake and paying a premium, but then want to come here and hope that it's going to go up. Until we have national legislation, weed stocks will not be any good. And also for context, if you go look at the history of tobacco and how long that took to become nationally regulated and available, and the same thing with alcohol, that will give you a timeline for how long it'll take for cannabis stocks to become popular. But no, these are all below. Anything below $10, I don't like as a long-term investment. I'd rather you do it as a trade. But even this, most weed stocks are good to short. So I'm sorry, but go light up after the show and meditate.
Well, thank you.
Yo, Ian's on fire tonight.
Yo,
man. He's on fire. He's on fire tonight.
Yo,
you know that's interesting.
I'm trying to earn my keep, man.
Shout out to all the rappers out there, but every rapper is invested in a weed company. Just because you smoke weed doesn't mean it's probably a good idea. Like I've never seen, like, all these rappers have these weed companies, like these roll-up companies and these like bong companies. And
But that's dope. But from a paraphernalia standpoint, because you can look now that that's finally legal, because some of them came from that. But it being publicly traded, that's different.
That's different.
So, yeah. So when I lived in Colorado, a lot of those companies made a ton of money, but you couldn't put the money into the bank. So it's state legal, but federally you couldn't wash that money and put that money into the banking system, right? So it's great branding for Snoop if Meek does it Post Malone, people like that. But for shout out to Gabe that took he helped take CAN in public, and they're just not good now until like, and then one of the big players are probably Altria, Marlboro, maybe Budweiser get into the space when it becomes nationally available, but on a local level and then on the state level until it's across the board, no go yet. Shout out to all my Colorado people.
Edvard, unmute yourself. You've been unmuted.
Hey, how's it going, everybody?
We're good. What's
How you
up?
doing?
All right. How do you analyze a stock, like the true value of it? Because there's the market cap and then there's the true value. Like, where would you find the information for the true value of a stock?
Rashad, you want to kick it off? I'll follow up.
So technical analysis question. I mean, it's kind of a hard question to say what the true value of a stock is, right? Because it's kind of subjective. Like, there is no true value to the stock. It's like, what is the true value? The true value is whatever the stock market places at. Like, is the true value of Tesla $1,000? Elon Musk said no. He's the CEO of the company.
True. Yeah.
So, I mean, we can only make educated decisions in the stock, guesses in the stock market ultimately, because it's like we can look at the fundamentals of a company, their debt. We can look at certain things like what they have going on, partnerships, what they have in the future. We can look at the charts, technical analysis,
how much they're earning.
But ultimately, it's kind of a difficult question to say what the true value of a stock is, because a stock really it's subjective. It only is valuable as somebody. It's like saying, like, how beautiful is the most beautiful woman in the world? Well, that's kind of subjective to who you're asking. Like, there's really no set radar to say you're a 10. One person's 10.
Don't finish. Guidelines.
It's all subjective.
Guidelines.
It's all subjective. But Ian, what's your take on that?
I would say that because I don't think that. Well, of course, Apple adjusted for stock splits, but I don't think Microsoft being at 200. I mean, that company probably should be at 1,000 before Tesla. But the technical answer is, when you're investing, you essentially are taking a combination of companies that are one or two in the leadership space. And then secondly, you're really gauging human emotion in real time. So if you're able to master those two things, you'll be fine. And then you'll be able to tie yourself to companies that are going up and are of quality. I don't think Tesla is more valuable than Apple or Microsoft, but the market currently says that it is. I can't fight that. So I don't want you to be so emotionally tied to what you think it should be and always tell everybody in red panda, play what's in front of you. I know you think this should be that, but it is what it is. Even with, like, going back to the weed stock, you would think as many people that are interested in weed companies that the value will be higher. They have not been yet. Let's not get into that. So I want you guys to stay focused on what's in front of you. If a company is good, invest there. Don't guess the future, because you can end up drawing down a ton of money before that tidal wave turns in your favor.
And ultimately, it's a lot of things that's out of your control too. Like, there's formulas, PE ratio, and all that stuff. But I don't personally believe that all of that. I don't believe in that stuff, because I don't believe in any formula to dictate the price of a stock, because, like Big Business said, that's one of my favorite quotes of all time. He was talking about real estate, but there's outside factors. It could be the best company in the world. If the economy tanks, the stock price is going to fall 9 times out of 10. Like, so if it's a lot of circumstances, and like Quentin said, shout out to Quentin Martin. He was our first guest that we had to talk. It's ultimately the stock market is really moved by a person's perception. And these people's perceptions move the market.
Right,
so I personally think that Apple, because ultimately we don't know where Apple's going to be next month. That's the good thing about still options. Options is really you're betting on a future, right? It's a future. We don't technically, theoretically, Apple could fall apart, theoretically.
And if it does, I'll be the first person to say it's over with.
Yeah.
I will, because that's a good lesson. Yeah. Once something falls off, like if I have a ball player and then I see LeBron at St. Mary's, I'm like, listen, bro, I like you. You've been killing for us. I have to go get this new kid. So if something becomes more valuable or more worthy than Apple or Microsoft, I'll be the first one to declare it. But until then, because you can have a good market cap for a stock and it's still underperformed. That's what I say about fundamentals. You can have a fundamentally sound company and buy it at too high of a price. Eventually, fundamentals will work you out of it. Great. But guess what? It's hard when you're drawing down 15 and 20% of your portfolio to say, well, the 10K looks amazing, so I'm okay. you are going to cry into the 10K. It's a combination of both. You need technicals and fundamentals, but most importantly, as an investor, you need patience and you need discipline to wait for the right spot. The companies never do anything wrong to us. The market never causes us to lose. We have bad entries into it. You learn this in options. You learn this in trading futures. The market has done nothing to you. The market is water.
Yeah.
Too much of it can drown you. Too little of it, terrible. The right amount would nourish you, right, and help you accelerate and grow and prosper. So it's about the decisions that we make into the market. And that's why I tell everyone, you guys don't need more than 4. You really don't need more than 4. You can keep it simple. Or you can have 20 and make your own mutual fund and then be reading reports all night. It is your choice. The market never does anything bad to us, ever.
That's Ian's quiet storm.
Yo, that was crazy. Switched on us.
He has multiple personalities. I'm starting to notice.
Hey,
He's a sports reporter.
Yeah.
He's a hip hop analyst,
Don't forget Leroy.
and he's a ladies man with the quiet storm. This is okay, baby. Like this.
Yo.
You know, I gotta modulate. Come
Yo,
on,
we had
let
a
me
great
get my
day
prodigy
today.
off. Shout out to P.
We had a great day today.
For real, for real.
I'm about to do. Yo, can you walk 20 miles for 65 straight days?
That's a tough one.
That's my bro. Rob, this is my guy. Rob, what's going on, bro?
Y'all killing me.
Hey, what's going on? Can y'all hear me?
Yeah, we hear you, bro.
Cool. Hey, so first of all, happy Father's Day to everybody.
Appreciate you, Rob.
Thank you.
You
Likewise.
So I had a question with SPACs. I think SPAC, the special purchase acquisition companies. I think like Nikola was one, like DraftKings was one. So I stumbled upon one. I ain't gonna lie, I just like took a shot in the dark about it. It's called FMCI. And then I was just curious, like from when it comes to that versus like IPOs, like is there any type of strategy, or is this like you're just taking a guess because it's a new company?
IPOs, I typically try to stay away from. So in investing, you want to have a competitive edge. So I will ask you, with this company or any like it, what would be your competitive edge? Like, do you have a knowledge edge? Do you have a legal inside track to give you some insight about the industry? I wouldn't jump on it too soon. Like like going back to the analogies, I want ball players I know can hoop. I don't want to see if you can hoop on my dime. So I want to have enough footage to know, listen, when he gets trapped, he's not going to shake, right? He's good down the clutch. Same thing with these companies. FMCI is decent. If I look at the long-term chart, it's had a hell of a run up. I mean, it went from 952 up to 20, but I know through our history, it's probably going to slide back to 12 or 13. If it's a good company now, it'll be a good company maybe in 4 or 5 months, and then you can look at it again.
So with this one, they already told you like who they're partnering with. So I think they're partnering with some plant-based company or something like that. I think it's called like Tattooed Chef, something like that. So
I can partner with Jigga, but I ain't me. I can give you a good 8, but the 16 may not be that good. So I'll give it 3 or 4 months. It doesn't mean that the company isn't good. Chart looks amazing, right?
Nah, I'm done. I already got bars on me. I'm done.
I mean, it's been a great run, but that 20 back down to 12 is going to be pretty fast. So anytime any company comes out of the gate too strong and it goes up 40-50%, I'm always leery because great companies aren't growing that fast. So the 50 for my traders, the 50% moving average is at 1474, the 23.6 is at 1199, the 38.2 is at 1350. Maybe at the 23.6 you can take a stab at it, maybe do 100 shares if you're interested in it. But if you're looking at
I'm already in at like 13. So I think I'm just gonna, I mean, I didn't put too much on it because obviously it was like a blind take on it, but
yeah. Okay. Let me ask you this. You got in at 13. At what point will you take profit?
I ain't gonna lie. If I double up, I'm out.
Okay. What if you don't double? What percentage?
I want to leave with at least 25% at least. So I didn't do the math on it, but
do the math on it. That's your homework assignment. Do the math on it. And then that will tell you what your exit is. 25% is amazing though.
I appreciate the game. Thank you, man.
Bro, what's up, bro?
Appreciate
Shout
you,
out to the town.
We got like 2 more questions before we wrap this up. But Ian, do you have any trader tip of the week?
Trader tip of the week. I want you guys, and I pointed to it with him, but like, I want you to know what your first small target is going to be and your second long target is going to be, right? Because you have to know what percentages you are going to get out of the market. But the biggest lesson I can give you, I want you guys to start focusing on trading 3 to 4 things. So for those of you that trade penny stocks, you're constantly researching a hot list, and that puts you at a disadvantage. You want to be able to look at some stocks or futures or options that you can consistently trade, because you'll know the personality of them. You'll know when they'll break out to the upside or downside, and you'll know how to play them. Because that way, if you are constantly trading the same ones, you end up having a home court advantage. When you're trading 45, 80, 100 different stocks throughout the course of a year, you're playing away games every single day, and that's not fun. So focus on 4 stocks or futures that you guys can master. For those of you that trade futures, ES, ZB, UB, Dow are amazing, and then you can trade the same ones over and over again, rinse and repeat, and it'll take a lot of the stress and will limit the number of research
Because
hours that you put in.
you trade the same. You saying you trade ES every day, right?
Yeah, I trade ES, ZB, UB, and the same thing. I'm like, I know I'm Jordan. I got Starks on me. Great. 1 dribble fade away. I know one of them gonna go in, but if I have to go search NIO, Tesla, GNUS, then I have to research, and then the confidence isn't there because I'm like, I don't know about this company, because now if I have a 2% stop loss on a biotech company, it may run 15%, and I may get stopped out prematurely. Once you learn the same ones over and over again, it makes it a lot easier, and then you don't have to have the same fear and trepidation that you would in the market.
Oh.
Two more questions.
Talisha, we coming to you. Unmute yourself. You've been unmuted.
Good evening.
Hey.
Hi. Quick question. How do you all feel about Urban One?
Urban One. Good question. Actually, I'm very glad that you asked that question. So that is the Black-owned radio station, I believe, right? And it's actually interesting that you asked that question, because on podcast, what number was that? We talked about that
last week. I remember it.
It was like 2 weeks ago, when all this stuff was going down. We spoke about that along with a few other ones, and then it was crazy because last week it shot up crazy. I think it was up like 50.
Yeah. You sent me that text.
Yeah, it went up like 48% last Tuesday. I don't know if that was a direct correlation to people really just interested in buying Black companies, because there's only 12 Black companies on the stock exchange. Yeah, there's 12 Black companies on the stock exchange out of 4,000. And it was interesting because they had a couple of them had a really good week. Unfortunately, it came back down a lot now. So I mean, of course we're always gonna go for the brother man as opposed to the other man. But I'm rooting.
Is it a smart investment?
I don't know if it's a smart investment.
I'm not sure either.
I
don't know what they have on the horizon. Like you said, we want to support. I'm just not sure what they have coming.
Yeah. The tough part is, like, my heart wants to say yes, the chart tells me no. So you have to separate from the two. It fell 46% today. It hit the high of 54.16. Let me see, 1, 2, 3, 4, 5. Maybe 6 days ago it was at $7. So it jumped up a lot. Great. But it's probably going to angle back down towards $8.42. It may be a good opportunity above, 7, but my heart wants to say yes. The chart and the analysis is saying not at the moment. Not at the moment.
Yeah.
Thank you.
Good question. Thank you. Appreciate it.
We got Rich Parker. Rich Parker, we coming to you. Unmute yourself. You've been unmuted.
Rich, what's going on?
Y'all continue to hit that like button, share with your friends. I love y'all so much.
Rich, what's up, brother?
Rich, what's going on?
Man, I just got on here to tell y'all guys I appreciate y'all. Happy Father's Day to y'all, Ian. All y'all, man. Y'all definitely do y'all thing. I've been following y'all since last year. And I just want to thank y'all, man. Y'all helped me take my journey out the street life pretty smoothly. So, man, I appreciate y'all. This is my first time even being on a Zoom call. I joined social media platforms because of you guys. I never had a Facebook or Instagram, nothing. So, man, I just want to appreciate y'all, man. Y'all, especially you, Ian. I got 4 kids, man. I got one on the way, which is my 4th one. I'm excited. I know y'all can hear
Congrats,
it.
man.
You in the stock club?
Y'all. I'm definitely in the stock club. I'm definitely in the I'm an earner. I'm all that. And I only bought it just to support y'all.
Nah, I appreciate that's real though. That's real, man.
That's love, Rich.
And you know, that's deeply encouraging to hear. You know, you said I made my transition from the street. And it's not the first person that I heard say that. I've heard so many different people say that. Like, you know, people growing up in certain neighborhoods, they never thought that, you know, you could really make real money doing something that was legal. It's either like get a regular job, or if you really want to, you know, be an entrepreneur, it's a street. But there's a lot of different ways to make money out here that's legal. And you don't have to risk your freedom. And it's all about information and knowledge. So that's one of the things that, you know, one of the main things that we try to just do is just give people different outlets, whether it's stocks, real estate, trucking, vending machines. So anytime that we hear somebody that is living testimony of that, it's like kind of like, you know, you might have saved somebody's life. You never know.
Yeah,
so we appreciate
y'all definitely saved my life, man. I'm a living testimony. When I started, right now I got 3 properties now. 4 doors.
Wow.
I'm about to close
That's
this week
incredible.
on another unit. I pulled my trigger May 17th on my first stock, period, to where
Proud of
now I got 21 Microsoft. Last week I pulled the trigger on Apple in the VU S&P just to
guy.
get one because I was scared of it. And I'm up on everything right now. So man, I appreciate
You
y'all.
cooking. And
Yo,
I
Rich,
appreciate
shout out to you,
being
man.
fearless. I love that. Rich, can I ask you a question? What,
man, please.
For the people who are not from the streets, can you tell, and 50 talks about this a lot, but what are some of the lessons that you took from that life that makes you more fearless to execute quicker? Because I know some people that have MBAs that don't have 4 doors in any shares. So what are the things that you learned from that life that helped you here?
Man, for me, you know, being in the streets, I gamble, you know, so I gamble with my life. So it's like, man, this is a different aspect that I can gamble on with my future and building assets. And I got kids. So, you know, that's what really changed my trajectory with just having the kids. And it's like, man, like they say, just one stock at a time. Even with the investment, you just pull the trigger. All you gotta do is pull the trigger. I pulled the trigger with just literally signing up, creating my Facebook, and creating the Instagram. Mind you, I'm 31. And I never had none of that. And this is a part of our era technology. And I just finally pulled the trigger. So, man, I'm a living testimony to whoever is listening. I advise y'all to just join that giving the game. All y'all got to do is just pull the trigger with any aspect, especially with Earn Your Leisure. They're giving y'all a platform about any and everything possible. I bought it just to support it. I barely even go on there and listen. And I just bought it just to support it. And I can tap in at any time and get the jewels that I need. So, man, I love y'all from the bottom of my heart. I appreciate y'all. Ian, last week, that cash app you sent to Latasha Carter, that was my baby, one of my baby mamas. I got 4 kids, 4 baby mamas. And I take care of all of them. Man, I appreciate y'all.
I didn't
I
even
can't
know
even
that.
believe I'm on the call.
That's crazy. That's
I
crazy,
appreciate
man.
it.
Nah, I love you. I love you for that, man. That's
Yo,
crazy,
Rich, man. Love, man.
That's crazy, man. You never know, man. You never know, man.
You never know. I didn't know they were connected. Rich, do me a favor. Email me at Ian at Join Red Panda, and then when we roll out the new program, you'll be the first one who gets it on scholarship. I appreciate you, man.
Man, I appreciate that, man. I appreciate y'all, man. I love y'all guys. Happy Father's Day again. So all y'all.
Rich, where you from?
Please. I'm from Milwaukee, Wisconsin.
Okay.
And I've been following y'all since like February of 2019. So I've been following y'all for a long time while I was still going strong. I was listening to y'all. So
that's love.
Man.
Shout out to all my Midwest people.
Yeah, shout out to Milwaukee. Shout out to Brandon Rule. Yeah, man, I appreciate that, Rich. That was dope for me, man. That was dope.
That's
You know,
incredibly
a lot of times
humbling, man.
you do this stuff and you know, it's just kind of, you get jaded and stuff like that. But to hear real life people that, you know, we didn't know anything about, now he was going to call up, and to hear that it's actually having an effect on some people's lives is extremely humbling. So that was dope for me. That was dope for me, man.
That's extremely humbling and extremely gratifying. And like I said, man, the greatest human act is to inspire somebody else. So to hear the testimony that you just gave, man, it's incredible. I greatly appreciate it. Like I said yesterday, I was with the book club in EYL. I was just like, yo, my heart is smiling, man, when I hear things like that. So we appreciate that. Thank you.
Nah, appreciate that, man. So I think that that's a beautiful way to end it right there. You know, that's the solid testimony from a good brother. We gotta thank you guys for checking in on us. If you're on YouTube right now, can you please hit the like button? That helps a lot. Shout out to MG, the mortgage guy. We'll be doing a class with him on Thursday for real estate investors. If you know Matt, you know he's always going to come with a bunch of gems on the real estate side. So I'm actually going to learn something from that. EYL University, as the gentleman said, is a whole dope community. So if you're looking to join that, we got a promo code running 40% off. Code earners for the annual membership. The price goes up on Friday. So don't hesitate. Don't wait. If you want to join us, we'd love to have you. As Ian said, I don't know if he want to spill the beans on that yet, but he's cooking up some special red panda sauce.
Yeah, I'm excited.
Red Panda remix sauce that he gonna be releasing real soon. And just keep supporting, man. You know, we always gonna be here for you guys, but the more support we get from you guys, it makes it easier. You know, it's all about group economics. So Ian, what would you like to tell the people?
Everybody in Zoom, all the earners, I love y'all so much. Troy, Rashad, Mike, Jamal, love y'all. Thank y'all for including me in the family. Everybody on YouTube, I'll see y'all. Y'all comments lit. So you guys are amazing. And once again, kudos to Rich, because I'll end here. Like, I think one of the most important things that we have to do is not only like teach kids early, but like we can't just tell them like, yo, get off the block. Like, you have to give them some money or a way to make money in order to move them out of that spot. So the more that we learn, like just us alone, we can't touch everyone in the country. But if we actually execute, you guys can take the same information and be like, hey, this works, do this, and then follow my lead. So I think we can all help save a lot of kids in our communities that are getting gunned down, and so they don't have to go towards their life a crime. But it has to start with action. Kids don't want to hear any theory. They want to see the money.
Yeah.
They want to see it. So if you can show it to them and then you talk like them, right? Because I could be more bougie and all that, like how the perception was in the beginning when nobody knew me, right? But I was like, I want to talk and rap and in sports metaphors and analogies, so it clicks a lot faster. So like, share the information that you learn with your kids early. Don't wait till they're 18 and 20, because they're already in the streets by then. Save their lives. Execute so you can save generations going forward. And I'll end here. I know everyone wants to build generational wealth, but we can't do that unless you sacrifice now. You can't wait for the next generation to start building wealth. It has to start with us. So I love you guys so much. I appreciate you all so much.
Nah, that's a fact. Should we talk about next week?
Go ahead, fire away.
All right. So next week we got a really dope episode where we're gonna bring a guest in. We try to bring guests in sometimes, and that's gonna be something that we're gonna be doing more of. So we're gonna be talking about biotech, and we got a gentleman who is I spoke to him today. Good dude, Dennis Herrera is his name, and he actually owns a investment firm out of New York. And his firm invests in biotech companies. So it's two-part conversation. He's going to talk about the biotech industry and like break it down and talk about all of the different things that's going on. But also, he's like one of these guys that actually helps companies get listed on the stock market. So he's like part of like the underwriting process to actually help like these biotech companies get listed on the stock market.
We haven't spoke to an underwriter before.
No. So he's like a real big dude. In the investment world out of New York, and I spoke to him. He's a real cool dude, down to earth guy. So he's gonna come on. He's gonna give some information on not only the biotech sector, but also companies that are private and their transition from going private into public. So that's a dope conversation. I'm looking forward to. That's next Monday. So make sure you guys are early for that. Make sure you tell everybody, and then as I said, we'll have some more surprises for you guys down the pipeline.
Yeah. And tomorrow we got a big one. So make sure y'all check that out.
Shout out to
our boy Derek Grace.
Shout out to Derek Grace too. TWO.
That's gonna be huge.
TWO. A lot of excitement for that. A lot of anticipation for that. Derek Grace, marketing genius. He's the first person that I ever saw that's retiring from social media.
Yeah,
he got a whole campaign.
We got 6 months left, right?
60 days.
60 days left.
60 days, and he's retiring from social media.
He's gonna retire for good.
So he's saying.
Oh, he's gonna do the Jay-Z.
That's what he's saying. That's what he's
That's
saying.
huge.
But you know what, man? You can't judge a book by its cover. The guy has 47 face tattoos, and he's really a nice guy. He's really
Solid.
nice.
Smart brother.
You too. Somebody asked when we're going to see the Shaq interview. We're working on it.
Soon.
We're working on it.
We gotta just work that out.
Yeah, we're working on it.
Soon. So, all right, guys. Thank you guys for rocking with us. Hit that like button. Spread the word. And we will
share on social, please.
Yeah.
Share on social. Share with your friends. Text your family and friends. If you got some value out of this, and then maybe in a couple weeks when we drop this new thing, I'll give away maybe 5. So let's get these numbers up. I appreciate y'all so much.
I ain't selling them no dream. I just showed them the cream. That's how we doing it. Let's go. Have a good one, y'all. Be safe. Hug somebody. Love somebody. Reach out to somebody.
Peace.
We'll see you
next. Shout out to my family. Peace.
Peace.